Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video. Have you missed me? Happy New Year. I missed you guys, and it's nice to be back in the saddle. It's nice to be back here, back in the markets, and I know you guys are excited too. I do think that 2022 is going to be the best trading market as of that we've had for years. As central banks globally start to move rates, we start to see rates rise as inflation is rising, growth is staying good, so that gives the central banks flexibility to actually start moving on monetary policy. Now, the reason why that's going to be good is because that's going to create a lot of expectations in the FX market. It's going to bring in a lot of expectations for, what rates are going to do, and it's going to move risk appetite. Stocks are going to rotate. It's going to be great. So no better place to be than with ForexAnalytix. So you're going to have to sit through this pitch because right now on the screen, you see that our pricing is, for $1, you get 10 months or 10 days for free. You get to try it out, right? For $1. Okay. When you come back to this site, we will have our New Year's pricing available to you, which is buy 1 month, get 1 month free. You can get a semi-annual subscription, and your semi-annual subscription, you're going to get 4 months. And with an annual subscription, I believe you get 8 months, and it might actually be 7, but you'll have to just look at whatever the pricing is when it's published. The tech team is taking care of that, and the sales team is, so it's not something that I necessarily know exactly what it is, but I know it's a steep discount, and it's like the biggest discount that we do throughout the course of the year. So take advantage of it because it's only going to be live for at least the next week, maybe 2. So take advantage of it. All right, now I gotta say, you can see everything that comes with ForexAnalytix, but you're going to get the premium version on these discounts. Now we do have the light version, which is $19 a month, that gets you the live webinars that we do for all the ForexAnalytix subscribers, but you don't get the chat room, you don't get the advanced analysis. And with the premium plan, with the discounts that I just named, you're going to get the full package. And those live webinars that we do outside of the F.A.C.E webinars, the free F.A.C.E webinar that's only an hour, there's several other hours throughout the course of the day that we do webinars live just for you. Now, also the chat room is probably the most active community chat room in the FX market. So you want to take advantage of that. And also make sure you download the mobile app. What other company gives you a mobile app for analysis? You have all of that analysis as we publish it. Comes right to your desktop, all the alerts, all the notifications for, support and resistance levels being tripped, new analysis coming out. So make sure you download the mobile app, no matter if you're using the App Store or the Google Play Store. Now, I just mentioned all that. Make sure you take advantage of it. I thank you. Thank you for those of you that have been with us, for years. And for those of you that are just joining the community, welcome. And I'm glad to have you here because this is going to be the best place to be going into 2022, this community that we've got in the FX, and not just the FX market, but in every market out there. All right, so we're going to talk, and this is the ForexAnalytix dashboard. I want to talk a little bit about, I'm going to make a few adjustments on the live charts. The analysis gets done over the weekend, and I'm filming this a little early, but I can show you my previous daily chart for the most part. You can see we've been looking at this euro dollar as a really big range. It's between the 112.25, 112.20 to the 113.70, 113.80 range. That's been the range. Now, where did we end up by the end of the day? By the end of Friday, we ended up higher towards the upper end of that range. But I want to make a few adjustments here to the charts with you guys here because we have some pretty important data coming out this week. And we're going to have like CPI data coming out, which is going to be the consumer prices and the producer prices, both Wednesday and Thursday, are going to be probably the most important pieces of data of the week in the U.S. It's gonna move the dollar. But you guys that have been listening in for a while, you guys all know that I'm bearish the euro, bullish the dollar while we're below this descending trend line. I always thought we were going to bounce around here, and the reason why I say that is because if you take the low from 2020 to the high of 2021, that's the post-COVID lockdown move. The 618 is where we've been consolidating. What's surprising to me, though, is that we have not seen like this big dollar sell-off while stocks have been moving higher. And the reason why that is because expectations of the Fed to move rates, quicker and faster than everybody else is, that's what the market's been playing. But surprisingly, stocks have been really strong, and the dollar hasn't been as weak as I thought it'd be. Now, I still want to stay bearish the euro while we're below that right now it comes in this descending trend line around 114, let's just say roughly 114.30, okay? But the way I'm looking at it right now is if you connect the lows in the euro like this, okay, and then you connect the highs like this, we are still developing what you would call as a pennant. So early in the week, this next week, I would not be surprised if the euro dollar pushes like it has been. You can see it. If you draw a horizontal line, right, what happens is you'll find out that the market, chases the euro higher. They think, oh, here's the breakout. Then they get smashed, right? Days after. Buy the euro again. It's going to break out. It's breaking out. Then they get smashed, right? What's to say that's going to happen, not going to happen again? I know a lot of you guys might say, well, there's a lot of comments coming out of the ECB, even over this weekend, about rates, and they have to be a little bit more aggressive. If you think so, then eventually we are going to break out. But again, what I would think right now is while we are below this 114.30 level, you've got to remain bearish that the euro's in a downtrend. Now we get above that is going to be a little bit different story, which could happen this week. If CPI comes in below expectations, I would believe that stocks rally, right? Because stocks are going to say, well, maybe the Fed doesn't have to be as hawkish. You're going to see the dollar sell off as a result. People are going to start, instead of thinking there's going to be 4 rate hikes or 3 rate hikes in this year, they might pare back those expectations. There are a lot of traders and a lot of economists out there right now that believe we are at peak FOMC hawkishness. I don't necessarily agree. I think the Fed is going to be moving, and I think they are going to, take this opportunity, call it an opportunity for the Fed to actually normalize rates as much as they can while the going is good. Because we all know life, economies, there's black swan events like we saw last year or 2 years ago in 2020, but everything's cyclical, and we've been in an expansionary period for a long time. So I still think that the Fed is going to, kind of be more hawkish than the market. The market expects them to be its peak, right? I don't know if they're going to let up. Not right now. Not while there's no reason to, right? No. I'm talking about the euro, and again, while the euro is below this 114, let's just call it 114.30, 114.50, you got to remain on the bearish euro camp. If we break that, we get a sustained break above that, my tune will change because I think we are going to trade up towards the 200-day moving average that's closer to 117. By the time we get there, if it broke out, it'd be right around 117, I would think. If you look at the scope and the velocity of the 200-day moving average, we're probably going to end up being right around there, by the time we get there, if a breakout occurs. Now, I said if. Let's take a look at some of these other currencies. The Aussie, surprisingly, as risk appetite has been stronger, the Aussie came out in an ascending wedge. We've been rejecting this 50% retracement right here. We found some support. We are creating what I like to say lower lows. Does that mean that the trend has reversed? No, I don't think the trend's reversed. I think what we've got is a nice little, you can call it a flag pattern. You can call it a pennant. You can call it ascending. You can call it an ascending channel. But right now, while we're below the 7250 level, you got to remain on the bearish camp. Now, you guys know several weeks back I was bullish the Aussie. I bought the Aussie as we were at 70 cents. I actually think I got 69.99, I think is what my average was. And then, my average eventually was like at 70.30 as I added to my position on this way up. It was a great long. It was a good counter trend long. I still think you buy the Aussie on dips, but I do believe that the Aussie might create a lower low and still could breach this support at some point. So if we break below 70 cents, that's obviously going to usher in some, near-term weakness. Now, that's not something that we should even be thinking about right now. That's not something that I'm even considering right now. What I am looking at is as we're above 71 cents, there is a risk that we move back to 73 cents. That's the same thing when you're looking at the euro dollar and you say, well, as long as the euro dollar, if the euro dollar breaks above this 114.50 level, that might see a recovery. Yeah, what's going to follow it is maybe the Aussie as well. Now, there's no major Australian data that I can see coming up this next week, but that doesn't mean that the Aussie can't move, especially if we start to see, risk appetite strengthen once again. And we start to see, copper prices move or maybe gold start to move, something like that. Now, I also want to point out, in case there is continued dollar weakness, we've been talking about that this week with the US dollar Canadian. You guys, if you've been listening to the free daily F.A.C.E webinars, I think pretty much daily this last week, you can go back and listen to the recordings that are out on our YouTube channel. By the way, you should subscribe to this YouTube channel if you're not subscribed, because it's free and you can go back and listen to something that I might have said, last week or a couple of days ago, or even if you missed it live, our live free F.A.C.E webinar, you can go back and listen to it, later in the day if you weren't able to be there while we were live. Anyway, you've seen me throughout the course of this week talk about, this head and shoulder pattern. And while we're below this 128.50, there's a risk that we trade back down towards the neckline. The neckline right now is at 126 and change. We call it 126.20, 126 and a quarter, somewhere around there. And you can see on Friday, whoops, I did not mean to delete that, but I deleted it anyway, and I'll have to go figure out what the hell I just deleted, but that's all right. Anyway, that support right there is coming under pressure because we had the U.S. jobs report, but the Canadian jobs report was also, stronger. And, the weaker headline number out of the U.S., even though the not just the headline number, everything else factored in, the jobs number was not a horrible number, but still the dollar lost some steam on Friday. That doesn't mean that that's going to continue. And, we do have, and let me just refresh your memory here, just from a few minutes ago, the euro is approaching some pretty key resistance. The dollar Canadian is also approaching some pretty critical support right now. But watch it, because if we do get below there, we do get below that 126.20 level, we are at risk of maybe seeing a move back down to the, let's call it maybe 125.50. And it's a head and shoulder pattern. I mean, it could actually play all the way down to the low 120s if it actually decides to play out. But what would have to happen with that is we'd have to see a continued rally in crude oil, which I'm a little skeptical about right now, because crude is at what I consider some pretty key resistance up here, with this harmonic pattern that's building. So you got to factor that into your decision making, especially when you're trading the CAD. If crude oil starts to sell off, the Canadian currency could sell off. You could see that dollar Canadian strengthen right off of that 126.20 level of support. Hope I'm not speaking too quickly for you guys, but look, I've got a lot to talk about today. And one other thing I want to mention just today is, if you think that this is the only thing that matters right now, it doesn't. We've got to look at the S&P, and I've got to say that the S&P closed this week with a bearish engulfing weekly candle and a false breakout. So, one of the things, if you listen to the free daily F.A.C.E webinars, one of the things that I talk about is, pretty consistently, almost on a daily basis, is if the stock market sells off, will the dollar gain some strength as a safe haven currency? In my opinion, and I stand by this, and I have for years, the dollar, in order for the dollar to strengthen significantly against major currencies, or let's just say all of them, in order to see the dollar really, really take off on a bullish run, we'd have to see a very significant sell-off in the S&P. So when I say significant, yeah, we start getting down towards the, 15% correction from the highs, somewhere down here, I think you really got to start thinking, oh, the dollar might actually catch a bid across the board. But when we're just going up and down and oscillating in a strong upward trend, as we are right now, the dollar probably is not going to gain strength dramatically against a bunch of like the broad basket of currencies. What you probably will see is the dollar outperform or perform better against commodity currencies, emerging market currencies, and things like that. But if you see a big sell-off in equities, that's when you start to see the dollar really catch a bid as a safe haven asset trade. Now, the reason why I bring all this up is because, look, any which way you slice it, that is a bearish engulfing and a false breakout in the S&P. So the way I view this is any rally early in the week next week, you probably want to try to sell into a rally for now. Okay. Obviously, by the end of the week, we'll see how the week closes. But my expectations are we'll probably have at least one more. And I'm just going to draw it and I'm going to turn it red and I'm going to make it wide. We're probably going to see one more red candle, at least following up with this bearish reversal that we've seen. Now, again, is it going to have an effect on the US dollar, broad-based effect on the US dollar? Probably not. But will the dollar perform better against commodity currencies like the Aussie, the Canadian, the Kiwi, maybe some emerging market currencies like, the peso, maybe the ruble, maybe, the rand, maybe against the lira? Yeah, that's probably the risk. Now, there's a lot of cross currency plays you could trade, which I'll talk about on the F.A.C.E webinar on Monday. Just make sure you remind me or I might forget. But there are different plays that you can do there. If you just want to get the dollar out of the equation completely, you could do that. But if the stock market does start to sell off, just imagine those commodity currencies and emerging market currencies probably aren't going to act as well as they have been, at least in recent weeks. So a few other things that are happening this week. We have Fed Chairman Powell. He is speaking. Let's see, where is he speaking at? He's speaking for renomination. Oh, it's his he's getting renominated, and but he will be speaking, which is important. That's going to be on Tuesday. I forgot this is the week. CPI data, PPI data, unemployment claims, retail sales at the end of the week. We're going to start looking at retail sales and making sure the consumer is still holding on, even though these higher inflation pressures are starting to build. That is something that we do need to pay attention to, I think, moving forward, because it's you take an average person who lives paycheck to paycheck. When prices go up, energy prices go up, costs of food and rent and housing and everything else, school and everything else goes up. It starts to pinch the wallet, and when it does, other goods fall by the wayside. You stop, spending so much money at Walmart or on Amazon or, buying the things, the non-necessities. And that does happen. That behavior changes. So we got to watch those retail sales at the end of the week. But I have to say this again, guys, this is the week. This is it. Go get the special price of ForexAnalytix, lock it in. For those people that have, had it in the past, they'll be grandfathered. But this is the time that if you want to take advantage of the pricing that we do once every year, we've been doing it for the last 5-6 years or whatever it is, take advantage of it now. You get this really beautiful platform with ForexAnalytix. You get the premium version, you get the chat rooms, you get the, live squawk, news feed, you get our private news flow feed that comes through right through here. You got all these extra tools. Make sure you take advantage of it and come join us at the ForexAnalytix family. So guys and gals, my name is Blake Morrow. If you like this video, make sure you give us a thumbs up. It always makes me feel better, makes the team feel better. Also subscribe to this channel because it's free to do so. So this way you don't miss any of the free F.A.C.E webinars. And if you did, you could go back and listen to the recording. My name is Blake Morrow with ForexAnalytix. Thanks for joining me. Have a great remainder of your weekend. I will see you on Monday morning. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.